Hi, my name's Jake Mitchell. I'm a reporter with the Australian newspaper. Today we're here to talk about the life cycle of a company that wants to list on the ASX. We'll start out looking at how they get to the point where they're ready to IPO. Then we'll look at some of the opportunities and benefits of an ASX listing. And then we'll look at some of the challenges and issues after a stock market listing. So firstly, I'll get the panel to introduce themselves. Maybe start with Tim.
Thanks, Jake. I'm with Baillieu Holst, the stockbrokers in Australia, and we've known Patrick and Luke since the beginning, and we've had a lovely journey along the way with the boys. So I'm the stockbroking side of this panel, and I'll pass you on to the lawyer.
Thank you. I am Michael Ziegelaar. I work for Herbert Freehills, and giving ourselves a free plug, probably the #1 IPO law firm in Australia.
I'm Luke Elliott, a co-founder and executive director of Catcha.
Is that all?
Rob Silverwood, I'm a partner with PwC working out of Melbourne. I've been fortunate enough to work with Luke and Patrick on a couple of IPOs and also M&A work.
Thanks. I'm Eddie Grieve. I'm from the listings area of ASX, and I work very closely with companies that are looking to list on the ASX.
Okay, thanks team. Maybe we'll kick off with one for Luke and Tim. How do valuations and pricing on the ASX compare to other exchanges?
Well, it's a fairly open-ended question, but I think broadly at the top end, you probably have companies over $1 billion which would have a higher valuation on NASDAQ than they would have on the ASX. Having said that, the interest for companies listing in Australia between 100 and 300 million is very high, and often companies come to Australia, they list, they get recognised, and often can then move on to NASDAQ at some later stage if they wish to. But broadly speaking, I think most people have been very happy with the valuations we've seen in Australia. I think there's been 25 IPOs in the last 12 months in the tech space. Of over $1 billion has been raised. So I think, although at the top end, as I said, NASDAQ gives you the higher valuation, broadly for the smaller companies, the ASX has been a very happy hunting ground for most people, I think.
Okay, Luke?
Most technology companies are much more high growth than traditional industries, and I think that a lot of exchanges around the world have trouble valuing them effectively because they don't have the experience of seeing the growth play out. So Australia's been fortunate to have a number of different corporations go from being quite small to being multi-billion-dollar companies in the technology space. And so when you tell the story to an Australian market, they've seen it, they understand it, and so they're willing to value it more appropriately than, say, sorry if the Singapore guys are here, but Singapore Stock Exchange, who doesn't necessarily have an investing community that's had the experience of seeing the growth play out and the kind of growth that makes their valuations look more rational.
Okay, so one for Rob and Michael, I think. What are the sort of key issues companies should be thinking about when they're preparing to list?
So I might start, in terms of the legal side of things, it's important to think about your board and start familiarising themselves with the company. And Rob, you can talk about forecasts and getting them familiar with the numbers.
Yeah, so really key important point to focus on early is having an audited history. So a lot of focus has come out from ASIC, the Australian regulator, about 3 years of audited data. So very important to get that audit underway, and particularly if you're doing acquisitions in the lead up to the IPO, making sure that those acquisitions have also been audited. A really big focus, if you do have a trading history, is around forecasts. So again, there's pretty tight regulation in terms of what needs to go into those forecasts and how those forecasts are supported. So really coming back to valuation, the way to get the best value out of the IPO is to have a good, robust forecast that goes out sort of 12, maybe 18 months.
Okay, well, I'd be interested to get your perspective on this, Luke. What are some of the key challenges companies face when they're preparing to list, and how can they get ready for it?
We're just laughing because I think he and I have had about 10 different fights on why I don't want to do forecasts, but anyway, I think
Tell us about the fight.
No, the biggest challenge is people think that a listing is an ending as opposed to it's just a start of a next chapter for a business. So people approach it as though it's a form of exit, when the reality is it's just a form of capital raising. So when you approach it understanding that it's just a stage in the corporation's development, you have an entirely different mindset to someone who's saying, wow, I've made it because I'm public. And I can say from experience, when we listed our first company in 2007, I don't think we quite appreciated the complexity required of an organisation and the sophistication required of its internal reporting capabilities, in terms of its understanding of how to address not only a capital market but also a regulator. And it's a pitfall where you see a lot of these tech companies list and they don't perform, and simply because they don't appreciate how complicated it is to be a public company. That's probably the biggest problem.
Okay. And Eddie, we haven't forgotten about you. Why would a foreign company list on the ASX, and are these sort of listings common?
Yeah, so thanks for that. I think some of that's already been covered, but perhaps in a macro sense, perhaps I should just share with you some stats about ASX. So ASX, in terms of market cap of its companies, is the third largest in the region, in the Asian region. So behind Japan and China, and the ninth largest in the world. So it's a significant exchange in its own right. And very importantly, it's got a huge funds management industry, and that's the result of the superannuation system, which was introduced in 1992. So currently, we have funds under management in superannuation of about $1.6 trillion US. And the important point about that pool of investable assets is that it creates great liquidity in our market. So we have a great capacity for capital raising and ongoing liquidity. And that's actually reflected in the figures we see in IPOs. So last year we were sixth in the world, ranked sixth in the world in terms of capital raised for IPOs, $23 billion US dollars. And consistently over the last 5 years, we've ranked fifth in the world for follow-on capital raising. So it's a great market for capital raising, essentially.
So one for the professional services types, Rob and Michael. Are there any specific legal or accounting issues associated with foreign businesses listing on the ASX?
So Jake, the short answer is there are some differences, but they're very minor and quite easy to deal with. So, for example, if it's a foreign company that you're listing on the ASX, the threshold question is, will the market see that unfavourably? And assuming that they don't, you list a security called a CDI, which is essentially treated as a share. There might be a few differences, like if you want to take over the company, the foreign law in that overseas jurisdiction applies rather than Australian law, but they're all quite minor things. And Rob, you can talk about the accounts differences.
Yeah, so it's typical as well that if you are doing a primary listing on the Australian Exchange that you'll introduce a new Australian head company. So that's a very well-worn path, and I think, again, coming back to why it's pretty easy for foreign entities to list on the ASX, really a key accounts consideration is just making sure that those historical numbers have been done in accordance with international financial reporting standards. That's sort of an area, again, that ASIC's really focused on recently.
Thank you. So one for Tim. Can you take us through the sort of typical marketing process for an IPO?
Yeah, sure. I think one of the things our job is to do is, first of all, if a company does see itself as wanting to come to the market, we have to, at some stages, as Luke said, some are just not ready. And our job is to say, look, keep doing what you're doing, come back in 12 months' time, or we think you are ready. So that being said, what we would normally do, having met the company and feel satisfied that it's got the merit to go to the market, we do a sort of non-deal roadshow where we specifically pick institutions in Melbourne and Sydney particularly that would relate to the company that we're obviously trying to promote. And part of our job initially is just to try and educate these fund managers as to what this particular new company might do, particularly in IT and tech. A lot of this is new, it's groundbreaking. Some of the fund managers need to be brought up to speed. So Once we have, we've gone round to see the fund managers, we then get some feedback as to whether they think the merits of the company are good enough to float and get a sense of where it sits. And then we discuss with the other advisors, the lawyers and the accountants, and then we come back at some later stage with an IPO, with the actual deal. But I think it's very important in the early stages, particularly in a company that is new to the market, that we educate the fund managers. And it's a very big market. You know, there'll be 40 or 50 fund managers on the eastern seaboard of Australia that are interested in this space. So it's a captive market, but we also have to be very clear about educating them. So when we do come back with a pricing and an IPO, they know the story, they know what to expect. So that's broadly as we see it.
Okay, thanks. Look, this one's probably best suited for Michael and Tim. What's a typical board composition for an Australian listed company?
It's typically 5 directors. Sometimes for largest companies you see 7. Majority of them should be independent. So let's say you've got a 5-person board, you're looking at 3 independent directors. Ideally, those 3 have listed company experience. Where it's worked really well is you've got someone who's run an IPO as a non-executive director previously or as a CEO in a previous life, and they interact with the investment bankers and the lawyers, and they're the conduit between the board and the advisory team.
And half female, I should hope.
Yes, and yes, there is definitely a push for gender balance on boards. Absolutely.
And just to add to that, Michael, just a need to have 2 Australian resident directors as well. So certainly something to think about for foreign companies looking to list. It can often be a hold up in the process if you're struggling to find your 2 Australian resident directors.
So, Michael and Luke, in your experience, what are the key challenges you can face during the listing process, and how can you prepare for them?
Wow. I don't think... So we've done 5 IPOs, 1 failed, so 4. We're doing our 5th, hopefully successful one now. Every process is entirely different.
Which one's that?
I can't say.
They want to hear.
Sorry. Yeah. So every process is different. You can't prepare. One thing that I think people need to know is it's not easy. So I think that a lot of people think, wow, it's so easy to list on the ASX. And I hear it all the time. Oh, you know, it's going to be so easy. We're just going to do an IPO on the ASX. And it's really, really a very complicated, time-consuming and difficult process. And if you don't have someone who has enough experience to drive that process aggressively, and that's with relevant legal experience and understanding, relevant accounting experience and understanding, relevant corporate finance experience and understanding, and maybe even an understanding of how to sell a business to someone who may want to invest, it's probably doomed for limited success. So I think that not underestimating the quantum of tasks that is involved in making it happen is probably the most important thing.
So as Luke said, I think where the IPO has worked really well for a company is where one of the senior management team, whether it be the CEO or the CFO, has done an IPO previously. And if you've done one, then you really understand the issues coming up. The other thing that as professionals I'm certainly guilty of is I kind of know what's going to happen next week, next month, or in the next couple of months. Whereas if you're a client that's new to an IPO, it's really important to understand that. Get timetables, understand what's happening next week, next month, and it'll help you prepare for it and work with your team better.
Thanks. So, Tim, how can smaller tech companies remain relevant after listing in terms of maintaining investor and market interest? You know, aside from shooting the lights out, obviously.
Well, it helps if the company performs. Look, there are a lot of companies that come to the market through backdoor listings that are very small and frankly stay small. So having said that, ones that do come to the market and are successful are ones that where there's good broker research after it has listed, that there's consistent and incisive research on that company, and it's updated regularly. You need a good IR person to make sure that the media is aware of some of the company's achievements. You also need to make sure that you know, even when you got bad news, you tell the market what the bad news is. Even hopefully it's mainly good news, but it's making sure that, that also there's active trading, that you try and get a few brokers involved in your company. The more brokers involved, the more research reports out there, the deeper the market, the greater the retail presence, the more spread you get with the institutional market. So I think all those things are important, but at the end of the day, it will depend on whether the company is actually performing. You can go out and rev the market up as much as you like, but if you're not delivering on what you say you're going to do, it's not going to reflect in the share price. So my advice would be in this regard is to, under-promise and over-deliver, and that way the market will take care of itself.
And just to add one thing to what Tim was saying, it's really important to understand the listed company environment and your corporate governance requirements in Australia. So there's a rule that says that if there's materially price-sensitive information relating to your company, you've got to disclose that immediately. So it's really important during the listing process to sit down with your lawyers and your accountants and understand, as Luke was saying before, listing is just the start of the process. And to become familiar with the post-listing environment during the listing process is really important.
And sorry, Tim, do you think brokers generally have been good at really putting in the hard yards to maintain that relationship after the listing?
It's a good question. I think it's very important that when you bring a company to the market, you choose a broker that has some track record in the space. I come from a medium-sized broker. I used to work for a big broking house. Now, if you go to a huge house and expect them to be supporting you as a small house, often they may not be there. So we often find that we bring companies to the market, and then eventually the bigger houses get hold of the story, and other bigger houses get involved. My only, I guess, summary of it is that just when you do go to the market, do some homework, go and check out who's performed well as a broker and as a lawyer and as an accountant, work out those that have got a track record and those that haven't, and head for those that have performed. And that's just a matter of doing your due diligence and making sure when you go to Australia, that you hopefully go to a house that has a proven track record.
Okay, thanks. So Rob, in your experience, what sort of additional costs do companies generally incur after listing?
So we typically see there's probably about 800,000 Australian to $1 million incremental cost, really associated with sort of the audit process. So you need to get an annual audit done, as well as a half-year audit. Obviously the board that we've already talked about, so that number definitely flexes on how many directors you've got and what sort of costs they come at, as well as ASX listing fees. So as a general rule of thumb, it's something to think about when you're looking at sort of the future prospects of your business and what the earnings profile is going to look like.
Okay. And one for Luke and possibly Tim. What are the benefits of being listed? Can it help with undertaking mergers and acquisitions and that type of thing?
Definitely your access to capital is better, and the currency that you can use is in two forms. It's cash, but you can also use your listed securities, which are liquid, as a manner by which you can acquire other companies. So for us, we've typically used the listed vehicles to acquire other companies post a listing, rather than trying to buy a bunch of businesses and then float an aggregated business on the exchange. We'd rather float one and then use the currency, which is effectively unlimited because you can continue to issue capital to make future acquisitions. So we like that.
Okay. Anything else anyone would add on that one?
No, I think Luke's mainly covered it. I think there's no doubt when you are listed, you have a lot of M&A currency, and when you're dealing with a public company as opposed to a private company, you looked at slightly differently. And I think going public makes you more accountable in a sense. You've got to get your systems in place, you've got to get good management in place. So I think it straightens everyone up from being a private company to a public company. Going public, of course, you can look after staff as an employee, opportunity to get involved in the company so you can reward staff, bring new people into a business. So I think, as Luke says, going public's not for everybody because there is an accountability side to it which you need to be aware of. But I think in terms of the benefits certainly outweigh the negatives in that point of view.
Michael, you?
No, I was just getting ready.
Well, that's probably it from me. Is there anything else any of you guys are stinging to get off your chests?
I probably didn't answer your question fully, I think you asked whether many companies, foreign companies, are listing on ASX. And actually, we've seen quite a significant trend in that direction. We've had, I think it's 20 companies from the Southeast Asian region list in the last 12 months. We've had about 10 companies from the US. Interestingly, we had an Irish company, the first Irish company ever, a tech company in the medical space, listed earlier this year as well. So we are seeing a lot of interest, and I think we're at, the reason we're seeing that is that one of the unique aspects of the Australian market is that companies can list at a relatively early stage. So investors are prepared to back companies which are high growth. They understand the risk-return profile of these sorts of companies. So it's quite unique in that respect, because other markets don't tend to have that investor base, and they tend to require these companies to list on a second board, which often doesn't give the same outcomes, frankly. Second boards really don't work terribly well in our experience.
Jake, the only thing I'd add is all of the professional services firms have publications on how to list and what's involved and life after listing, etc. So if you're interested, please talk to us after the presentation.
Anybody else want to add something?
I'd probably just add, Jake, it's never too early to start planning. So I think coming back to Luke's points around how difficult the process is, the sooner you can start thinking and acting like a public company, getting the right management team in place, particularly a really strong finance function, start thinking about how you forecast and manage the business that way, it'll really make that transition into public life a lot easier.
Okay, great. I think I've got a plane to catch, so if you guys are okay, I'm okay.